Yeah, it's online live now. Good afternoon to one and all. Welcome to the webinar on recent changes in GST law and GST practice management, held jointly with all the branches of Kerala. On the screen, myself, CA Aryan, Chairman of Thrissur branch. Others, Chairman of Kottayam branch, CA Prashant Srinivas sir. Vice Chairperson of Palakkad branch, CA Anuja Jayakrishnan ma'am. Vice Chairman of Kannur branch, CA Shivaprasad sir. He will be joining very soon. Respected speakers of the day, past Central Council member, CA Madhukar sir, CA Spudarjunan sir. Now, let us start the webinar with Institute motto song.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Kamam 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 Pursho nirmimanaha Tadeva shukram Tada brahma Tada brahma Tadeva mritamucchate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
Thank you. Now, let me invite CA Prashant Srinivasan, Chairman of Kottayam branch, to give welcome address. Over to you, sir.
Good afternoon, everyone. Chairman of the organizing branch, CA Aryan KK, Chairman of Thrissur branch, Chairman and Managing Committee members of the remaining organizing branches, faculty of the evening, CA Madhukar N.Hiregange and CA Spudarjunan, all the participants, a warm welcome to you all. It's a topically very relevant seminar because the way the amendments that are effective from 1st January are put across by the media, it is a bit scary. Now, when Aryan sir and myself were discussing about it, I told we have none other than Madhukar sir to dissect the various amendments and to ward off the fears as well as to highlight what all are the pertinent points to be looked into. And meanwhile, Aryan sir suggested that we'll have a session on GST practice management as well, so that young members will also get benefited. So we together made an attempt. Aryan sir contacted Madhukar sir, and Madhukar sir readily agreed, and this seminar has become a reality. Madhukar sir, as you all know, he has been past Central Council member, and if so many chartered accountants in India are now practicing in GST, it is because of Madhukar sir. Because when he was the chairman of Indirect Taxes Committee, he introduced various initiatives, various updates were being sent by the institute, various certificate courses on GST has been introduced. So he is the man behind training so many chartered accountants to specialize in GST. So I welcome to the webinar the GST man, CA Madhukar N.Hiregange.
Thank you, Prashant.
In today's session, Madhukar sir is being assisted by his partner, CAS Spudarjunan. Sir, I welcome you to this meeting.
Thank you, sir.
And I welcome all the participants, all the managing committee members once again. Let us have a fruitful discussion on various amendments in GST and GST practice management. Thank you.
Thank you, Prashant sir. Now I call upon CA Anuja Jayakrishnan ma'am to introduce today's speakers, CA Madhukar sir and CA Spudarjunan.
Thank you, Aryan sir. respected Chairman of 9 branches of Kerala, Speaker for the day, CA Madhukar N.Hiregange sir and CA Spudarjunan sir, other dignitaries present, and dear professional colleagues. Good afternoon all. Today our session on recent changes in GST law and GST practice management is handled by two speakers, CA Madhukar N.Hiregange sir and CA Spudarjunan sir. Let me introduce CA Madhukar N.Hiregange sir. CA Madhukar N.Hiregange, a fellow chartered accountant with more than 3 decades of experience, is a senior partner of Hiregange and Associates Chartered Accountants, having several offices in India, specializing in indirect taxes, FTP, and value-added audit. He has been volunteering to the Central Council of Institute of Chartered Accountants of India for 6 years, and he has been the chairman of Indirect Taxes Committee. He is involved in efforts to make the indirect tax laws in India simple, certain, and fair, and creating an awareness of the potential of knowledge of indirect taxes in India. He had jointly authored 29 books in Central Excise, Service Tax, Karnataka VAT, IDT audits, and GST till date. And he is on a mission to create committed professional leaders and has encouraged and fostered 140 plus leading professionals in industry and practice to take up ethical practice in indirect taxation. He is very active in the field of spreading awareness through articles and workshops, both physical and online. CA Madhukar N.Hiregange is a knowledge partner to Hiregange Academy, which is an employability and knowledge initiative, and he is a managing trustee of Empower Education Foundation for the past 15 years, supporting the education of lesser privileged students. Next, our second speaker, CA Spudarjunan sir, completed his schooling and graduation in Kanyakumari and later pursued CA course and completed his articleship in Trivandrum. He qualified as a chartered accountant in the year 2017 and is currently pursuing LLB. Post-qualification, he joined Hiregange Associates Chartered Accountants and is specializing in indirect taxation and is currently heading the branch of the firm in Kerala. He has practical experience in UAE VAT and is presently focusing on GST, customs, and foreign trade policy. He has written a booklet on beneficial schemes under FTP 2015-20, published by Hiregange Academy, and has assisted and contributed to the handbook on GST audit, published by KSCAA. Also, he is an assistant author of the book Compendium of Issues and Solutions on GST, published by Bharat Law House and Tax Sutra. He has assisted and contributed to many other booklets and books under FTP, GST, and UAE VAT. With this, I welcome CA Madhukar N.Hiregange sir and Spudarjunan sir to the session. Welcome, sir. Thank you.
Thank you. Thank you.
Shiva Prasad sir is also joined. Welcome, sir. He is vice chairman of Kannur branch, sir. Now, the floor is open to you, sir. Madhukar sir and Spudarjunan sir. Please.
Thank you very much, Prashant and Anuja and
Sir, your sound is coming, breaking. Can you just check once?
Is it all right now?
Better.
Still not good enough. Let me start and then maybe I'll continue
Oh, sure.
after some time.
Meanwhile, Spudarjunan sir can start. Yeah.
So, thank you very much. And today's coverage we will take in 2 parts. Part 1 will be around 90 minutes, and then we'll take a small break after that, and we'll take questions, then take a small break, and then we will go for the practice management part of it. We can go to the next slide, Arjun. I will take a couple of these updates. Very, very important is this concept of mutuality. You have this applicable to any association, societies. Many of them today are these high-rise buildings or villa projects, where there is an association formed by all the owners of that association, and they administer it themselves. So this particular aspect was something which was argued, litigated in income tax to a very great extent, and they were exempt from income tax except for income which they earn. That is, that if they earn some income from FDs, those are liable, rest of it is not liable. Similarly, the thought was that even in the service tax era, even though associations were bought into the service tax, there was a thought process that only if they earn some income, they will be liable, otherwise they should be exempt. For example, there is an apartment complex and they have also got some 20 shops in the ground floor. The rent which they receive from that would be liable, but the rest of it would not be liable, was the understanding of most of the people. What is basically an association? Association is Arjun, Aryan, Anuja, Prashant, and myself. We get together to do something together. Say we go for a picnic. Instead of all of us spending money each time, we give all the money to Aryan and we give some advance, maybe 5,000 rupees. And all of us in the end of the session, after we come back after 1 or 2 days, he gives us back the money or he collects some additional money. Now, there is no service being provided by Aryan. Aryan is a friend of ours and one of us only. Same way, associations also, there is no different person. Even though there may be a committee formed where there will be a president, treasurer, secretary, etc. Now, all of them, 99%, they are not paid also. They neither get, they don't get paid at all. They are not employees. They are not different from the members. This is the understanding which everybody had of association. And there were a lot of people who had doubts whether this could be taxed, in spite of the fact that in the service tax regime, this was said to be taxed. The Constitution of India also does not have, has a protection for trade unions and associations. Normally, no law in India can go against the Constitution of India. This is something which is very clear. Understanding this, many of the associations went to the courts and the Delhi High Court and the Ranchi High Court in the service tax regime had held that there is no liability under the service tax. The Calcutta High Court also had held similarly, and all these led to all these matters being escalated to the Supreme Court. However, after 2 years after the service tax regime came, went in 2019, the Apex Court heard the Calcutta Club case. Along with it, many other cases were also there, and it struck down the levy. Why did it strike down the levy? It struck down the levy because of the fact that mutuality, one cannot do business with oneself. Now, thousands of cases got closed. Many of the associations who had paid, all of those who were aware and vigilant, they made the refund claims. So some of them got it, some of them still stuck in orders have been passed, but the payments have not been made. After this slide, Arjun, you can take up. I will try and again get a correction fixed. I think people are finding there is still some break in my voice.
Yes, sir. Yes, sir.
Yeah, I will just finish this slide and then we can go on.
Yeah, yes.
So the impact is that a lot of people went for refunds. Many of them just left it. In the GST regime, again, they have made some changes in the levy section itself. And this has led to the point that again, this issue which was settled by the Supreme Court has got unsettled. So what is the impact of this? Some who have stopped paying GST may have to start again. This has to be examined. Some who are continuing may see whether they want to take a 7,500 deduction. Some of them not taking deduction, they may pay on the whole. The issue which is there is that the constitutional challenge on mutuality has not been addressed by the change in this levy. Arjun, can you continue? I will try and log in again through one more instrument.
It's okay, looks fine now.
Okay.
Correct, Arjun sir? It looks fine. Yeah.
Yes,
You can go to the next one. Sri Lakshmi says it's breaking.
Okay. You try, sir. One second, please. Yeah.
I will continue then. There is one more problem which has come from this regime. Like your 26 AS, similar thing is being tried out with invoices. 26 AS is something which happens once in a period. If every transaction, if you want it to be done, matched, then it becomes a problem. Here, what they are trying to do is that they want to see that every amount which is paid through an invoice, that is every tax amount which is paid through an invoice, is linked to the person taking credit. While the philosophy is very good. In fact, I remember in 2017, when I had met the Revenue Secretary, Mr. Hasmukh Adia, I had told him this is a disaster. Please put it in stages. Better you put e-invoicing in place, first for 100 crore companies, then 50 crore companies, then 10 crore companies. Then you can think of matching. This is what I had told him. Now you know e-invoicing is also started, but prematurely they are trying to implement the matching concept without having technology in place. This is very important. If technology is in place and if my supplier has not paid, I can check it automatically, then I am not bothered. Many of the suppliers are small suppliers. You have not educated the suppliers. The department has not had classes for the small businesses, how they should ensure that they don't make mistakes. Thousands of new registrations are coming up. It does not mean that the people who get registered are, chartered accountants or commerce graduates with good English and technology skills. Businessman is a businessman. We have at least 60% of the numbers are unorganized businessmen who may or may not be educated. They depend on consultants. Do the consultants know the law fully? Can they handle the changes which are happening day by day? These are things which are not taken care. So what is happening is that if a supplier makes a mistake, then the receiver is getting the impact. Was this only there in the GST regime? No, it was there in the VAT regime in many of the states. It had countless problems. Some of the states, what they had done is, they had put up a blacklist of vendors who don't pay. And you were supposed to check that and then take credit. But disputes were there even there. Because the vendor will make the payment later. They will not change the website. They would not have updated the website for vendors who have stopped filing returns and they are not paying, where the receiver is taking credit. After 4 years, demands would come. There were a lot of decisions in the VAT regime and then also in the service tax regime, which were very clearly said that, I think, Arjun, you should take it up from here. I will go out and come back. You continue. If I join, I will interrupt you or add. Okay?
Okay. Okay.
Continue on this slide.
Yeah, sure, sir, sure. In continuation to what Madhukar sir was explaining, so there were a lot of judgments and decrees under pre-GST regime, where the crux of the decision was when the supplier has violated the provisions of the law and has not deposited the money whatever he has collected from the recipient in the disguise of tax, and he has defrauded the treasury, then the recovery hands of the law should demand at first from the supplier rather than directly recovering or collecting from the recipient. Even a press release was issued under GST regime where the intention of the government was disclosed through that press release. Even though the press release does not have any legal binding on the assessees, it just gives us an idea what is the intention and objective of the government and also the law with regard to recovery from the recipient and also the vested condition prescribed under section 16. So even in the press release issued in year 2019, so the underlying essence expressed was the initial recovery has to be made from the supplier himself, and only in certain situations which are exceptional, like when the supplier is dead or supplier become insolvent and it is impossible for the revenue to recover from the supplier, only in such extreme circumstances the revenue recovery hands of the revenue shall extend to the recipient. Moreover, the principles of natural justice and doctrine of reasonable fairness should be followed by the revenue while recovering such unpaid or short paid taxes. Moreover, we had several decisions even under GST regimes by different high courts, including Kerala High Court, where the court was repeatedly saying that just because the transactions are not reflecting in GSTR 2A, it doesn't mean that there is a violation of section 16, subsection 2, clause C. When there is a genuineness in the transaction entered between the supplier and the recipient, and the goods were actually supplied, and the payment between the supplier and recipient has been incurred in banking channels without verifying or without looking into the genuineness of the transaction, where the recipient has already paid the tax to the supplier, direct recovery from the recipient is not just and fair in the hands of to the recipient by recovering the input tax credit whatever he has availed. So in the case of Joseph T and company, the Kerala High Court, why I have stressing upon the Kerala High Court decision is that the decision of Kerala High Court has a jurisdictional value and it is binding on all officers within the jurisdiction of Kerala. So that has much more higher value of binding rather comparing to other High Court decision which have only a persuasive value. We can take those rationals from those decisions, but that does not have any direct binding authority. And when there is a contradictory decision of different High Court, and it is up to the officer to bind on any of the High Court decision, whichever is favorable to him or whichever he thinks it's fit for him. So even under Joseph T company, the Kerala High Court initially said that when it is clear and when it is evident that this recipient has already made the payment to the supplier, and the supplier couldn't file GSTR1 because of technical glitches from the portal themselves, from the end of portal, where their registration were not provided to the supplier. And the court said that just because he couldn't file GSTR1 of previous periods and the department couldn't give a retrospective registration to that supplier, it doesn't mean that the recipient are deprived of availing the input tax credit. So they stressed one more time that the essence of availing the input tax credit should be decided based on the genuineness of the transaction and not based on the reflection of 2A. Moreover, the condition whatever we are discussing now is based on section 16 subsection 2 clause C, where it does not mention anything about 2A, where what the actual condition says is that the tax collected should have been actually paid to the government either through cash or through admissible credit. So here 2C of section 16 does not have anything to do with GSTR 2A, whereas GSTR 2A is mere reflection of transaction based on the disclosure made by the supplier through his GSTR 1. As we all aware, GSTR 1 is just a statement of furnishing the outward supplies and not a return where the payment is being made. So just because of reflection in 2A does not satisfy the condition of section 16 to subclause C. So the revenue cannot take up the condition that there is a violation of condition prescribed in section clause C just because of non-reflection in 2A. Why? Because the condition prescribed therein looks and seems impossible to be complied with. When there is no system of linking between GSTR 1, 2, and 3, the recipient can't have an assurance or ensure whether the tax collected by the supplier from him has been actually paid to the government. GSTR 3B is a summary return which does not correlate to the invoice level of disclosure made in GSTR 1, that is point number 1. And the second condition, the subcondition prescribed in that clause is that it doesn't even stop with the payment to the government, but it continues that such payment should have been made either through cash or admissible credits. Now, what is an admissible input tax credit and how a recipient is expected to know the payment mode of the supplier? How a recipient can identify whether the tax collected from his end has been paid by the supplier through cash or admissible input tax credit? Now, we don't know what is an admissible input tax credit. The responsibility or onus of availing eligible input tax credit is rendered with the recipient based on section 155. So the responsibility is the person who avails the input tax credit to prove that the input tax credit is eligible input tax credit. So at the time of payment during the monthly return, the recipient cannot be expected to verify that the payment has been actually made by the supplier and such payment also has been paid through admissible input tax credit or cash. So clear cut, the condition prescribed therein gets thwarted with the impossibility to fulfill or perform. And it is settled principle of law that a law cannot expect the person to do impossible things. And there is a Latin phrase also, the lex non cogit ad impossibilia. And the Supreme Court in past, they had struck down the provisions under foreign trade policy initiated by the customs authorities, where the verification of the supplier of scripts, genuinity of the scripts, were demanded from the purchaser of that script who purchased on bona fide purpose. The Supreme Court said that when there is a mechanism or when there is a methodology provided by the revenue or the administration to the taxpayer to have such verification, then there is a reasonableness in expecting to comply with such conditions. But when there is not at all an infrastructure, not even the infrastructure, what is being an underlying essence on enacting the provisions of section 37, 38 and 39, which is not made reality, and stressing upon a condition which is not at all possible to perform, seems unjust and unfair. Hence, condition to section 16 subsection 2 clause C is still challengeable based on impossibility to perform, but the government has taken several steps to overcome indirectly to impose or to continue with the condition of matching with either 2A or 2B, which we will cover in our upcoming updates. Moving on to the next major issue, which deals on provisional attachment of bank account. And it has been seen that moreover, more vastly in North India, the revenue authorities were taking drastic measures by just attaching the bank accounts of the taxpayers, irrespective of the malafide taxpayers and genuine taxpayers. We don't know on what basis they are bifurcating or differentiating between these two. They were following a standard procedure of attaching the bank accounts or attaching the property, stating there is it is being made in the interest of revenue and there is a possibility of siphoning of funds. from the bank account so that the revenue will get defrauded. With this basic conditions, we were seeing that there were several cases filed in high courts and even in Supreme Court. In the case of Radhakrishnan Industries, the Supreme Court specifically let down the procedures, and the judge has dictated the statement that even though the GST was intended to be a taxpayer-friendly law, but the way how it is being implemented has harassed the taxpayers, and the intention or objective of the taxpayer-friendly has not at all been achieved. With that, with the decision of that Supreme Court in the case of Radhakrishnan Industries, the revenue came up with the detailed instruction on how to pursue the provisional attachment proceedings under section 83, and there are court rulings providing the ground rules to the revenue regarding what are the basic conditions or essential conditions which has to be fulfilled or satisfied prior to initiating to the attachment of the revenue, because it was a tool for revenue to coerce the taxpayer to make payment in an advanced stage rather getting into the proper recovery procedures involving the principles of natural justice by giving him an opportunity of being heard. So this was used as a tool of coercion to milk the payment from the taxpayers. So in many courts' decision, the essence underlying on challenging the procedures what the department or revenue was following on provisional attachment, the High Court strictly reverted or reinstated to the revenue that the conditions, preempt conditions, what should be existing at the time of a provisional attachment of bank recovery, are there should be a pending proceedings existing at the time of decision making for provisionally attaching the bank accounts. So the prima facie requirement is a pending proceedings, which is being amended now, which we will discuss later. And the second condition is that there should be a proper opinion arrived by the commissioner, and there is no delegation given the commissioner for the purpose of attaching the bank account. The commissioner himself has to take the opinion by applying his mind that the attachment is being undertaken in the interest of revenue. So unless there is a siphoning of the funds from that bank account to some other accounts, or unless there is a genuine case of risk that the revenue get defrauded, the provisional attachment should not be taken place. It is just a provision to protect the interest of revenue and not a punitive measure. The revenue should not take this as a punishable measure for harassing the assessees. Rather, they should use very appropriately to protect the interest of the revenue. Sir, Madhukar sir, do you want to continue or?
Yeah, I will add a bit. Yeah, have you finished this slide?
No, sir, not
You complete the slide, then you stop. Every slide you complete and stop.
Okay, sir. So the courts has strictly given even past strictures stating that the powers given with a wide range should be handled with responsibility and accountability, and the power comes with the proper responsibility and effectiveness of the revenue authorities, which they should not take it or granted and start harassing and coercing the taxpayers. So looking into these persistent decision from the judiciary on the procedures whatever been followed by the revenue on attaching the bank accounts, the government has come up with certain amendments in the provisions of provisional attachment, which we would detailedly discuss in our upcoming slides. In the case of Siddharth Mandavia, the Bombay High Court has ruled out that section 83 specifically empowers the commissioner to decide or opine on attachment of bank account, and any other officer cannot be authorized are subdelegated for the purpose of implementing this protective revenue provision, which could be mishandled by the other officers, because the commissioner, the powers of the commissioner comes along with the duties and responsibilities of the same. So with this, I would hand over the session to Madhukar sir from the next slide.
Go back to the earlier slide. I want to add two things.
Yes, sir.
We have seen that the first one was talking about associations, and the second one is talking about provisional attachment. And there is one more in between, which talked about supplier's default. In all these three, one practical tip for all the practitioners who are there is that the first stage is that quickly, when there is a dispute, when there is an inquiry, when there is a note given, not the show cause notice, when the note is given, at that point itself, you should support the SSEs in putting down the points which we have talked about, including the case laws which we have mentioned. So putting it in writing and sending it by registered post and also putting it in the portal is one good way of avoiding further dispute for your client. It may not avoid fully, but at least it provides a base. The second is escalation. In case there is no reply to your letter, but it is being escalated, phones are being made asking you to reverse, and threats are being given, in which case one should escalate it at the first level to the deputy commissioner or assistant commissioner, and then immediately thereafter, within a week, if nothing happens, it should be escalated to the commissioner. So these are two wonderful ways of avoiding unnecessary, that is when there is a genuine SSC involved, who's not malafide, who is not connived with the fake bill, people, then one can go for this particular approach. If this is also not working, then of course one may have to go to the court. But going to the court is not that simple. It is also costly, and therefore, knowing this, these people try to make money in between. In case any officer tries to ask for illegal gratification, please put that in the letter. Don't say the name of the person. Don't say that he's asking for bribe, but mention the requirements of the officer are not something which ethical people can comply with. While mentioning it, they will understand what it is. And since it's a genuine case, about 60 to 70%, all the three cases may not proceed further. Yeah, you can go to the next slide now. I think you can go ahead and explain, and I'll add if there is something here.
Sure. So with this, we shall get into the applicable updates and amendments which are effective from 1st January 2022. The most important two updates which we would discuss initially is that the expansion of provisions of section 9(5), the levy section, by specifying additional 2 services where the electronic commerce operator would pay taxes on behalf of supplier. Number 1, the transportation of passengers through motor vehicles and omnibuses has been added in addition to motor cabs, maxi cabs, and radio taxis, which were earlier leviable under 9 subsection 5 of CGST Act. So with this, the effect is that previously there was only the motor cabs like under Uber and Ola, which was leviable under this section. Now they have extended to all motor vehicles and also omnibuses. So the substantial addition to the provision would be through the AC buses and through buses and also auto rickshaws, which are operating. Hope I am audible. So which are operating under.
Can you just keep it mute, sir? Madhukar sir? Yeah, okay.
Okay. Okay, I will repeat. I just missed the flow. So the substantial addition through this amendment is that even the buses and auto rickshaws who provides their services through e-commerce operator will get into the taxable net. Why? Because in addition to notification 17/2021, there has been an additional notification where they have removed or renounced the exemption available to the non-air conditioned state garages and contract garages which provide transportation services to the persons, which were exempted till 31st December 2021, are being deprived of such exemption with effect from 1st January 2022 if such services are provided through e-commerce operator. So they have to pay GST at 5%. So there is a chance of increase, not a chance, there would be an increase in the cost of transportation whenever it's been booked through e-commerce operators. Moreover, apart from the buses, the important and the heavy drastic impact would be taxing of auto rickshaws. So even when you book Ola or Uber Auto from 1st January 2022, the GST on transportation, in addition with an addition of 5%, would be charged by the Uber and Ola directly to the customer, irrespective of the status of registration of such actual supplier. However, there is a scope, or there requires a clarity with regard to inclusion of e-bikes and e-auto rickshaws within the ambit of such levy by the e-commerce operator, which is yet to be clarified. But on the safer side, we may see that even those would be taxed under this section, and the aggregator would directly charge to the customer. The main predicament persisting in the industry is that when the transportation of persons through auto rickshaw without e-commerce operator are still being exempted, and just because I have booked the auto through e-commerce operator, I am being taxed at 5%. Is this a violation of equality article 14, or is this depriving the possibility of business of these auto rickshaw drivers through e-commerce operator by just imposing tax on them, burdening them? And is it just a reasonable restriction on them for continuing the business? And moreover, even the livelihood of the auto rickshaws drivers, because of competitiveness, without involving through this e-commerce operator, even their livelihood could be impacted based on this amendment. And Uber India has already filed a writ petition in Delhi High Court challenging based on the violations of Article 14, 19(1) Clause G and Article 21 of Constitution of India, based on the grounds that there has been a violation of equality. That means taxing an taxing the services provided by auto rickshaws through e-commerce operator and still continuing with the exemption when it is being provided without the help of e-commerce operator, when the nationwide we are moving into the digital economy. So is it just a violation of Article 14? So the Delhi court has issued notice to the revenue, but rather tickling on the impacts or the challenges whatever persisting in the law, what are the possible grounds for the revenue to back up such levy? There could be chances that there won't be any violation of equality when there is an intelligible differentia between two transactions. And just because there has been an additional tax imposed on a certain transaction, that does not mean that there is a violation to Article 19(1)G. Imposing of taxes will not close down the business, and it is just an additional levy within the constitutional powers of the government. So what could be the intelligible differentia in this case where the revenue can still continue with this amendment on removing the exemption to the auto rickshaws and buses when they are providing through e-commerce operators. So the possibility of differentiation could be of these three grounds, stating that apart from e-commerce operator, if you directly avail the services of the auto rickshaws, the contract is between the driver and the passenger. Whereas in e-commerce operator, the contract is between the e-commerce operator and the passenger. And the e-commerce operator, he just organizes and provides the facility of transportation to the recipient. In this case, the driver has a negotiation power with the passenger with regard to fare involved in that transportation, whereas here the negotiation is not at all possible. The fare prescribed by the e-commerce operator has to be paid by the passenger. The third possibility of differentiation is that through e-commerce operator, there is a decision-making power provided to the passenger based upon the ratings of the driver. If he wants to change the driver, he can go for that, or he can cancel the ride and opt for a new ride. So, whereas under the general or the normal practices, such decision-making power based on the ratings or based on the pleasant nature of the driver, such decision-making powers were not available in our traditional or normal approach of transportation. So these could be the differentiating factor where the revenue can back up that. This is the reason why we are taxing when it is provided through e-commerce operator, and we are still providing exemption when it is not provided so. So with this, I have concluded, or I have provided my views on the amendment with effect from 1st January 2022, wherein the e-commerce operator would directly levy tax on the transportation services provided by them, including the buses and the auto rickshaws, with effect from January 2022. And the exemption, even the exemption provided for the non-AC buses and the auto rickshaws provided otherwise, will not be allowed for those service providers who are providing their services through this e-commerce operator. Madhukar sir, anything to add, sir?
Yeah, I have a couple of things. I'm not going to repeat what Arjun has said. There are two things which I think as chartered accountants we should know. Number one is that this reverse charge has come to this country, and due to various reasons, wherever the tax collection is not possible through one, they have been trying to do it through another. You had earlier in 2017, when the law of GST came, you had 9(4), which was, if you take anything, if you're a business entity and you avail of any services through a person who is not registered, then you are required to pay the tax. That was challenged, and finally, because of lot of opposition, that was dropped. One point there which is very important to note is that somebody who is working, trying to make his life in the lower spectrum is very important in India, because we have a lot of poor people. And if you are talking about non-AC buses, you're talking about auto rickshaws, or next I think he's going to talk on restaurants also, you will have the same issue coming up. So a person who provides the services directly, he can enjoy the 20 lakh or 40 lakh limit, whereas the person who is going through the e-commerce operator will require to pay the tax, and therefore I am not very sure whether section 14, that intelligent differentiation, can be proved is something which I am not very sure of. One more aspect which can be brought up, because I am sure that in Kerala also this matter will go to the High Court, Kerala High Court. You could possibly look at when the GST came, there was a tactic understanding that there will not be tax on taxes. When there is no ITC, when there is no credit, taxing something, that also where you tax an authority which is other than that particular service provider, maybe that is something which can also be taken up. You can go to the next slide, Arjun, and continue.
Yes. Sir. So in addition to the transportation of passenger service, one more service what has been added to the bucket of 9.5 is that restaurant services provided by restaurants or eating joints operating other than in specified premises. So we know that specified premises are those hotels or on those properties where they provide accommodation services and the declared tariff of any unit during the financial year in such property would have been equal or more than 7,500. So apart from 5-star hotels, wherever the restaurant operates, with effect from 1st January 2022, whenever they are supplying their services through e-commerce operator, the restaurants are not required to be charging GST on such transaction. Rather, the e-commerce operator would directly levy GST on such transaction. There was a circular 167 issued by the department clarifying the procedures of implementing the same. The clarification what the department has given is that the restaurant would still continue if it has been already registered because it's crossing threshold limit, would still continue to charge GST on the other transaction where the customer directly comes and dine in the hotel, or when he takes parcel services or takeaway services directly from the hotel without the help of such e-commerce operator. On such transaction, the restaurant will still continue to charge GST and pay the tax to the government, continue with filing of returns. The only leeway given to the restaurant is that whenever they are supplying through these aggregators like Swiggy, Zomato, Foodpanda, several aggregators, whenever they are supplying through these e-commerce operators, the levy has been, the responsibility of levy and collection has been shifted to the e-commerce operator from the restaurant service providers. So what would be the transaction in the hands of restaurant when they are supplying the services through the e-commerce operator? The government said that for the time being, they have not given the final clarification. The clarification said itself, in the clarification itself, they have mentioned for the time being, let the restaurant disclose such income, such transaction as exempted supplies in their GSTR 3B and GSTR 1, and let the e-commerce operator disclose such transaction in his GSTR 1 and GSTR 3B, either under B2B, B2C, as ever it may be, and taxable supply under GSTR 3B, and let them make the payment. So this is the temporary arrangement what the revenue has given in the form of clarification. Moreover, they have also clarified that irrespective of the registration status of the hotelier, irrespective of that restaurant service provider's registration status, the e-commerce operator would continue to levy GST on the same. So the benefit of the threshold limit for all these small scale restaurant has been snatched away. The e-commerce operator, irrespective of the turnover of the restaurant, would continue to charge GST from its customer. On the tax, whatever been collected from the customer, the circular specifically says that the aggregator, the e-commerce operator, has to pay such tax only through cash, and he cannot utilize input tax credit for the purpose of paying such collected tax wherever he has collected on behalf of the restaurant. So to that extent, he has to pay exactly through cash ledger, and he cannot utilize input tax credit for payment of such tax. As of now, the logic or the intention behind such condition might be that since such taxes on such restaurant activity, which is not at all a supply of the e-commerce operator, but he is only deemed to be the supplier for the purpose of payment of such tax. Because of the deeming fiction, since the e-commerce operator is collecting the taxes from the customer by cash, via cash, the government expects such e-commerce operator to pay such liability through cash. It's just a fiduciary account in between the final consumer and the government wants the revenue as it is how it's been collected from the final customer. Even though the objective or the intention is being understood by us, but the way they have implemented or the way they have clarified through a circular is not a proper way of implementing the law. Circular is just an instruction by an higher authority to his lower authority for uniform implementation of the provisions of the law, and through circular one cannot amend the provisions of the law. It has to be either through notification or amendment in act. So what is the power provided under the law to implement such condition? Yes, section 49 subsection 4 provides powers to government to prescribe certain conditions on utilization of input tax credit. So if the government comes up with that restriction through rules, by inserting such condition via rules, then it is still legitimate and valid condition to be imposed. However, we expect the government to identify such lacuna and understand that lacuna and rectify the same at the earliest. The next issue which might pop up through this amendment for the restaurant service, the e-commerce operator who are providing restaurant service, is that since the e-commerce operators are paying the GST on that restaurant services on behalf of the restaurant owners at the rate of 5%. So in the rate notification, there is a condition prescribed to such rate where it says the input tax credit in relation to such services are not being availed. Now, the payment of tax, collection and payment of tax on such restaurant service is being an additional liability given to the e-commerce operator. Can the department in future date demand or ask the e-commerce operator to consider such restaurant services, whatever they have disclosed in their GSTR 1 and 3B, as exempt supply because of rate notification and the explanation for given to such rate notification, where it says when the supplier is charging 5% GST, he is deprived of input tax credit in relation to such services. So can the department take that stand? We are of the view that it is not possible. The e-commerce operator would be considered to be a supplier under a deeming fiction only for the purpose of collection and payment of taxes, and he is not the actual supplier of such services. The condition prescribed in the rate notification should directly apply to the original supplier when he is charging from his customer, and it should not apply to the e-commerce operator who is just deemed to be the supplier only for the purpose of payment of tax. So even in 9.5, it might say that all the provisions of the law applies to such person deeming considered for payment of tax. So only to the extent of payment of tax, all the provisions applies, not on the basic supplies. So it will not be considered as an exempt supply in the hands of e-commerce operator for the purpose of section 17 subsection 2 read with rule 42 and 43. It should not happen, and we expect the government to clarify the same. Why? Because the trend or the practice, whatever we are seeing, is that more provisions of the law are being enforced by the authorities on literal reading without getting into the objective or the intent behind such enactment. Rather, the literal reading of law and literal interpretation is being followed throughout India in most of the cases where the revenue can extract certain revenue from or extract some additional taxes from the taxpayers. So considering such practices, and the justice could be served only through the high courts as on date because of non-constitution of tribunals, it is very much difficult for every taxpayer to fight till the high court or Supreme Court for the purpose of serving with the justice. So even the taxpayers and assessors should be vigilant to a certain extent, and they should express their dispute or express their protest whenever they are making any payment on coercion by the department, and they should be aware of all these available remedies within the corners of the law, as explained by Madhukar sir, that through escalation and expressing the protest through written form, because ultimately in all our litigation purpose, in the final stage and the higher stage, only the written form of communication helps and serves as an evidence. Rather, oral might have only a persuasive value and might not give us a strong ground for defense. So we should consider these issues from the perspective of the e-commerce operator with regard to availment of input tax credit, and we are of the view that there should not be any change in the procedure or method, whatever being followed by the e-commerce operator as on date. They should be entitled to avail the whole credit for the business or for the supplies what they are making to either restaurant or to the customer, and they are entitled to claim the credit. The final issue with regard to the inclusion of restaurant services under 9(5) is that, as we all are aware, with effect from January 2021, from last year, the restaurant service providers were deprived from availing the benefit of composition scheme if they are supplying through e-commerce operator who are liable to collect TCS. So till December 2020, the restaurant could have operated under composition scheme vis-a-vis operating through this e-commerce operator. With effect from January 2021, the government restricted such restaurant service providers to opt from composition scheme if they are supplying through this e-commerce operator who are liable to collect TCS. Now with this amendment, by including restaurant service as a service under 9 subsection 5 of CGST Act, the transaction of restaurant service is being removed from the taxable net of TCS. Why? Because under section 52, an explanation is being there provided for subsection 1, where it says TCS shall be collected on net taxable values, and such net taxable value will not include services notified under section 9 subsection 5. So with this amendment, the restriction what the government has came up with January 2021 has been diluted, and from next year, this year the restaurant can't opt for composition scheme because the time limit was March of previous year, and which is already been expired. Now the restaurant taxpayers are opened with an option of composition scheme from subsequent year if they are not clarifying such lacuna prior to March 2022. So what would be the impact when the restaurant service providers opt for such composition scheme? The impact would be double taxation. Why? Because whenever they are supplying through e-commerce operator, and the e-commerce operator would collect tax from the customer and pay the tax, and the assessee being a composition scheme dealer, when he is filing CMP 08 quarterly, he has to pay 5% on the gross supply, and there is no provision under the law as on date to deduct the services which are covered under 9(5). So ultimately, finally, even the restaurant service provider will finally end up paying tax from his hands, and the e-commerce operator would charge tax on the customers and will be paying on the same transaction. So there is a possibility and there is a risk of double taxation on the same transaction. Moreover, this is just a theoretical assumption, because we don't see any benefit to the restaurant service providers by opting composition scheme. The only negative of availing such composition scheme is that the assessee are deprived from collecting the tax from the customers. In regular registration or composition scheme registration, in both cases, input tax credits are not being allowed for restaurant service providers. So there won't be much changes, or there won't be much attracting factor for opting of composition scheme other than certain relaxation on documentation procedures and also quarterly payment benefit, where we can have a lenient working capital flow. So apart from these two small relaxation, we don't see any much higher benefit for restaurant to opt composition scheme. So even though there is a lacuna or the possibility of opting for composition scheme, in our humble view, we are of the view that the restaurant should not opt for composition scheme. They should continue with the regular registration so that they can avoid the lacuna of double taxation unless the government clarifies. If the government comes with the clarification within March 2022, because the time for availing the composition scheme would be March 22. If the government comes up with the clarification, based on such clarification, the taxpayers may finally decide whether they want to continue under normal registration or composition. But as on date, as on the law, as on today, we are of the view that the restaurant should follow the normal registration rather composition scheme. Madhukar sir, do you want to?
Nothing. I think you can go ahead, Arjun.
Yes. Yeah. Moving on to the next updates. There has been an increase. It is not an increment in hike in rate of tax, rather deletion of certain relaxation provided in the rate notification for the contractor and the subcontractor whenever they are providing certain services to governmental authority and government entity. Governmental authority, government authority and government entity are nothing but government companies or additional bodies where the government has control over 90% of the entity. So these are different from the government, local authority and government companies. So government authority and government entity are not one and the same with the government. So wherever the contractor as on date who has opted for construction services of any historical monument, canal, dam or irrigation works, or whenever he has engaged in the construction of pipeline construction or pipeline repair for water supply, sewage treatment or disposal, or any civil structure predominantly used for other than commercial or industry purposes. Here the business purpose will not include the activities of the government which they are dealing in public under public functionaries. So that will not cover under this business. So wherever the contractor has engaged into services with the government entity or government authority, whenever the customer of the contractor is being satisfied with the condition of government entity and government authority, we should caution the contractor that with effect from 1st January 2022, not only to the main contractor, but also to the subcontractor who is providing services to the main contractor for this list of services. So I am not listing on all the services. The PPT would be shared by the end of the session. We can have a look on the entire list. So whenever the contractor and the subcontractor are engaged in any services, construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation and alteration, in all these facets of service, if they are engaged with government entity or government authority till 31st December 2021, till the time of supply falling within 31st December 2021, they were liable to pay tax at 12%. And with effect from 1st January 2022, the rate has been increased to 18%. The net effect is increment in the rate of tax, but the amendment what they have done is they have removed the governmental authority and government entity from the relaxation or the concessional rate of 12%. So now they are taxable at residual rate of 18%. Even the subcontractors to the main contractors who are providing these services to government entity and government authority were taxed at concessional rate of 12%, and they are now being taxed at a residual entry with effect from 1st January 2022 at 12%, 18%. Apart from this, even certain exemption in availability to government authority and government entity has been removed with. So in case of any composite supply of works contract involving predominantly earthwork was liable to tax at 5% till 31st December 2021. Now it has been shifted to a tax bracket of 18%. So if the contractor is providing earthwork to the government entity or government authority, he has to pay tax at 18% with effect from 1st January 2022. Moreover, the exemption availability when the services are being provided to the government entity or government authority through providing services listed down under Article 243G and 243W of Constitution of India has been withdrawn with effect from 1st January 2022. The activities, this certain sample activities provided under schedule of Article 243G and 243W would be public sanitization, healthcare, public distribution system, and women empowerment and women education, poor social welfare services. So these are the sample items which are covered, or sample services, sample supplies which are being listed down under Article 243G or 243W of Constitution of India. Till 31st December 2021, exemption was available to such contractors, whereas with effect from 1st January, tax has been levied at 18%. So the impact to the contractors is that they have to revisit the agreement, or revisit, if possible, revisit the tender, whatever been already engaged with the government entity or government authority, and have an escalation clause only for the purpose of this GST portion. Otherwise, their profit margin would be eroded because of change in rate of tax, rather removal of exemption. So in this scenario, all the contractors during this transitional period of December, January, November to February, they should be cautious of the provisions of Section 14 of CGST Act, where the time of supply has been prescribed in the scenario of change in rate of tax. So while discharging tax in the month of January, be cautious and be aware, and also be prudent on selecting or deducting the appropriate rate of tax. So we should not be paying 12% in this place where it is being charged at 18%, and the risk is that this differential 6% could be demanded after 4 years with interest of 18% per year, which will equally double to the differential tax, and also with the 100% penalty. So proper precaution should be taken now as a prevention from the exposure of 300% of such differential tax after 4.5 years. So that is the maximum amount which could be possibly exposure. The 300% of differential tax or short paid tax would be the exposure under GST after 5 years, but that is not warranted in all cases. If the department comes to demand at the earlier stage, the interest component, the interest cost could be reduced. So with this, I have covered the rate amendment applicable to services provided by the contractor and the subcontractor to government entity and government authority. We should be careful that only to the extent of government entity and government authority such changes is being applicable. If you are directly providing services to government or local authority, you are still entitled to have such concessional rate, and also to claim the exemption benefit whenever the services are provided in connection to Article 243G or 243W of Constitution of India. Madhukar sir, do you want to add anything?
Yes. A few things, very important. One should remember as a practitioner that wherever exemption has gone, then the full rate comes, which is 18%. Most of the people assuming that they don't know about it, or assuming that the government will change the law later. When it comes, we will see. This type of a thought process can be very, very dangerous. Why it is dangerous is that whatever Arjun talked about was for 6%. So it will become 18%. What about if 18% itself you are going to pay? Without the ITC, which wouldn't have been taken, maybe bills are not kept, you have not filed it, you have not tracked it, and finally you are liable to pay after 4 or 5 years. It means destruction. That means that person will no more do business itself. This is something which one should keep in mind. Number two, in such contracts, not only should your client make a take care of the future, he should also take care of the ongoing contracts. All ongoing contracts, the rate may be frozen, and therefore there may also be contracts which say all inclusive, in which case early arbitration, early change of the contract requirement may be there to safeguard your client. Remember that these tax laws are not reasonable, and only the vigilant can keep alive, especially if he is providing services to such government authority or government entity. We should tell our clients very clearly in writing, maybe email also, such that tomorrow they should not come back to us and say, why did you not do this? You could have told me, I would have dropped the contract. You could have told me, I would have paid it. This is what, when they get a show cause notice after 3-4 years, they come back to us and say. So better we are very careful. Tell them to go not only to the authority for future, that government authority or government entity, even now itself, for all ongoing contracts, let them make the claim that we are going to charge this and this is what you will have to pay. This is something which I think practically on the ground, just like escalation point which I made, this is also a practical point which is very, very important for us, because after all, we are serving the clients. You can go take the next one, Arjun.
Yes, sir. So with this, we have moved into the applicable provisions of Finance Act 2021, which are made effective with effect from 1st January 2022. Certain amendments we have had a preliminary discussion in our initial slides. Here we will just go through the applicable amendments made to the provisions for implementing such changes. So there has been a clause AA has been added to subsection 1 of section 7 of CGST Act to levy, not to levy, but to consider the transaction between the person to its members, person other than individual. So apart from the individual, covering all other persons, including HUF, partnership firm, clubs, association, incorporated association, unincorporated association, body of person, etc. So any person other than individual to its members or constituents, or vice versa, any activities from the constituents to the person will be considered as a supply. So such amendment has been specifically included to overcome the decision of Calcutta, decision of Supreme Court in the case of Calcutta Club. And we know the reason behind the insertion of this clause is purely to overcome the decision of Calcutta Club, but the way or the wordings, whatever they have used in such clause, it still creates ambiguous. The phrase whatever they have used is a transaction between person to members, person other than individual to members. Now the person is wide, as I mentioned, several list of other entities could be covered within the phase of person. Now with this amendment, in future, can the revenue, in the sake of enhancing the account of the treasury, can they extend this provision between the partners and the firm? We are of the view no. The concept of mutuality is still available, and such concept of mutuality and agency has not been done away with. There should be two different persons, and there should be a requirement of certain services between these two persons for a consideration apart from Schedule 1 transaction. So unless these things been proven, even still based on the concept of mutuality, one can still challenge the taxability of the same. Moreover, between the partners and the partnership firm, there is not at all a service. The activity, what is actually happening is apportionment of profits, and no any additional services or any supply is being incurring between the partnership firm and the partners. So this could be a caution point which we should keep in mind because as I said, the revenue could interpret the law in any way by looking into the literal interpretation rather the purposive interpretation or the reasonable interpretation. They might get into this grammatical understanding, and they might extend the risk of demand in future. Moreover, the amendment has been come with a retrospective effect, with effect from 1st July 2017. So all the clubs and association, whoever supplied, not supplied, whoever collected certain amount from their members, are going to be taxed with effect from January 2022 for all the transaction happened from July 2017. Of course, there won't be any levy of interest or penalty, for which we have judicial precedents and settled principles that because of retrospective amendment, there can't be any compensatory interest or penal amount being levied to the assessee. Only the tax portion has to be paid, but whenever there is a default, even after 1st January 2022, then there could be a levy of interest and penalty only with the prospective effect, not for the retrospective period. Now, what happens to that liability paid by the club? If the member is a registered person, can he still avail the input tax credit pertaining to 1718? Or the provisions of section 16 subsection 4 will restrict the eligibility criteria of such input tax credit? That is still a question which is open to the revenue authorities. They have not clarified anything pertaining to the input tax credit portion. Only concentration has been given on the liability recovery end, which is more important for the revenue. As far as our view is concerned, section 16 subsection 4 should be understood in different dimensions, and it will differ based on the facts to facts of the assessee. If the assessee has not at all filed his returns of 1718, he has much more stronger grounds to claim such credit, because he is filing the 3B by paying late fees, which is nothing but late fee is a payment to restitute his own rights. So by paying a late fee, the assessee himself making right of the delayed filing of the return by paying the late fee. So there are case laws of Calcutta High Court stating that by payment of late fee, there has been a reciprocity from the government to the taxpayer in the context of income tax. The High Court said that there is a reciprocity by the government to the taxpayer by making right of the delay made by the taxpayer. So by payment of late fee, whether the recipient or the late fee paid by the club or supplier and the recipient, can they claim that the right to claim the input tax credit has been restored by the payment of late fee? Moreover, the argument or ground of GSTR 3B is not a return under section 39 has been diluted by the retrospective amendment made by the government for notification in the year 2019. Moreover, the unfavorable judgment by Supreme Court in AAP and Co. by just quoting the Bharati Airtel case, which is not relevant to the case of AAP, has badly impacted the expectation, the reasonable expectation made by the industry because of non-implementation of GSTR 1, 2, and 3. The time limit restriction, the time frame, whatever been prescribed under the law, it doesn't seem to be fair for the assessee, even though he has been vigilant or he has been tried to comply, considering the practical feasibility and his commercial viability in the business. So the availability of credit will create another pack of litigation, which could be defended and litigated, because when the government is collecting liability on retrospective effect from January 2022, they should also look into, there should be a certain fair while implementing the law. They should allow the recipient also to avail the input tax credit when he makes the payment to the supplier with effect from January 2022. And moving on to the next amendment, amendment to section 16 subsection 2 clause AA. Through this amendment, so whatever we had discussed on the recovery made to the recipient on the first basis without recovering from the supplier, where the supplier has not complied with the law by violating payment to the government. So to overcome such scenario, to overcome the impossible condition prescribed through section 16 subsection 2 clause C and also through rule 36.4, where the validity of the rule was challenged before several high courts, to overcome all these risks, the government has implemented or inserted an additional vested condition under section 16 subsection 2 to fulfill for availing the input tax credit itself. What is the new condition? The new condition with effect from 1st January 2022 is that the supplier has to furnish the invoice or debit note in the statement of his outward supplies, and the same is communicated to the recipient in the manner specified under section 37. And the rule 36.4 also been amended simultaneously with effect from 1st January 2022 to go away with the ad hoc availment of additional 5%, which was available till 31st December 2021, and also prescribed GSTR 2B to be the relevant document for the purpose of matching with the credit. So with effect from 1st January 2022, the legal position, whatever is there in the law as on date, without looking into its validity or looking into the challenging provisions, from 1st January 2022, the assessee can avail input tax credit only to the extent where the transactions are reflecting in GSTR 2B of his 2B, and the ad hoc availment of additional 5% has been done away with. So the major impact of this amendment is that the crux and the legacy decisions of Eicher Motors and Daiichi Karkaria, where they said once their credit has been rightly availed, fulfilling all the conditions, it becomes our vested right and indefeasible right, and it cannot be reversed or asked demanded back without the proper machinery mechanisms under the law. With this amendment to section 16 subsection 2, the government has made the reflection of transaction in GSTR 2B as one of the vested conditions. Thereby, they are trying to dilute the argument of vested right and indivisible right, where they could challenge that unless the vested right conditions have been fulfilled, the input tax credit may not be treated as a right of the assessee, where the condition of reflection in GSTR 2B has not been fulfilled by the recipient. That is the possibility and the risk in the dilution of the argument. And most of the amendments, whatever we are discussing today, which are being implemented with effect from 1st January 2022, are more revenue pro, and which requires the assessee to be much more vigilant and much more cautious and aware of the law, equal to the state tax officer who might be visiting the premises of the assessee or dealing with the assessee with regard to recovery cases. So we should be cautious while availing the input tax credit, and we should check ourselves whether the assessee could defend his case till High Court, because till the commissioner appeals, till the revenue adjudication, we may not get any favorable decision where it requires an opinion or decision to be made by the revenue authorities, where unfortunately most 90% of the case we might not get it, because the revenue officers might not pass any unfavorable orders to the revenue, which will impact their treasury. So only when the assessee is ready to fight and it is worth for the assessee to challenge or get back the right of his input tax credit, the decision with regard to litigative stand or an aggressive position could be availed. Otherwise, it is suggested to have a conservative view, considering the scale of the business and the capability of the business to fight or litigate till the court to serve with justice. Sir, Madhukar sir, do you want to add anything, sir?
I think we are running out of time.
Okay.
So we may have to go faster. One point I want to make is that this law is being more and more run by the government officers, that is the CBIC. the rule of law in this country is going on. So it is sad, but it is the truth. Therefore, basic things again have to be fought. When we go to the High Court, we have to always say that this is a value-added tax. GST is a value-added tax as per the way in which it was done. There should not be cascading. These two things, I think we have to keep reiterating whenever we fight for vested right, etc. Sometimes it's missed. We only go on technicalities and say this, section 16 doesn't allow this. It should have allowed, but doesn't allow. There we have to go back to the Constitutional Amendment Bill of 2010, where the government clearly said that this is a value-added tax and cascading is sought to be avoided. But wherever cascading is there, that point also should be brought into the writs. That's all I want to say. You can go a little faster now.
Sure, sir. Moving on to the subsequent amendments. Now we are going to deal on amendments with respect to e-way bill provisions and other demand and recovery provisions. The first amendment made with e-way bill provision is that previously the provision with regard to e-way bill was that when the main person, the person who is actually supplying goods and engaged in the movement of the goods, when he has been served with notice under section 73 and 74 and such proceedings got completed under such respective provisions, then any proceedings initiated under section 129 or 130 was deemed to be concluded. That means the conveyance has to get released. However, with effect from 1st January 2022, irrespective of completion of proceedings against the main person with whom the proceedings of 73 and 74 was taken up, the proceedings of 129 and 130 has its own path and it will not deem to be concluded with effect from 1st January 2022. So if we want to get our conveyance released, we have to still follow the detailed amended procedure with effect from 1st January 2022. Moving on, there has been an explanation added to section 75 subsection 12, where we should be more careful because this is a major amendment with respect to recovery to be made by the proper officer without following the procedures of demand and recovery. So section 75 subsection 12 says that wherever there is a self-assessed tax which has been declared by the assessee himself, then the officer can directly step towards the recovery proceedings without following the procedures of demand and recovery, like issuance of notice, opportunity of being heard. Without giving these procedures, he can directly jump into the provisions of recovery. Now, an explanation has been added to the term self-assessed tax used in section 75 subsection 12. What has been mentioned is that the figures reflected in GSTR 1 itself will be considered as a self-assessed liability. So whenever there is a difference between GSTR 1 and 3B, and GSTR 1 has a higher figure than GSTR 3B, if the assessee does not have proper reconciliation at the end of every month, then there is a bigger chance or bigger exposure that the officer can automatically consider this to be a short payment of self-assessed liability and initiate the proceedings of 79. Of course, there are possibilities of litigation, but prevention is better than cure. So we should ensure that the impact and the margin of the amendment, which could burden the taxpayer as much as possible, because the revision of returns are not being availed with. Hence, while filing monthly returns, try maximum to ensure the figures are being entered, the final figures, and ensure the matching of monthly reconciliation between GSTR 1 and 3B rather waiting for the annual reconciliation at the time of annual return. So now it is the time for the assessee to get his books with final figures at the end of every month. Otherwise, there could be a possibility of litigation opened with. And moving on to amendment to section 83 with regard to attachment of bank accounts. As I said previously, till 31st December 2021, one of the conditions to attach the bank account is the pendency of any proceedings under section 62, 63, 73 and 74. Now, they have amended, instead of pendency of any proceedings, they have amended with the phrase initiation of any proceedings, and they have added, expanded the bracket of proceedings to entire chapter of assessment, inspection, search and seizure, and demands and recovery, compared to specific section of 62, 63, 73, 74 till 31st December 2021. So they have expanded the base of provisional attachment, and also try to move the attachment proceedings from the pendency of proceedings to initiation of proceedings. So now the commissioner has power to attach when there is a proceedings has been just initiated under either section 61 or 62 or 67 whatsoever. Moreover, the power to attach has been expanded not only to the taxable person who is chargeable with tax, but also to the person who has retained the benefit from such taxpayer. For example, if an exporter availed input tax credit through fake billing and he has received the refund and made certain payment to his supplier out of such proceeds of fraudulent refund, then the commissioner has powers with not only to attach the bank account of the taxable person who has committed the fraud, but the commissioner can also attach the bank account of the supplier who have received the proceeds of such fraudulent availment of refund. So now the provisions of the law gives wide powers to the commissioner, not only to attach the person chargeable with tax, but also to the person who retains the benefit out of that transaction. The subsequent amendment is section 151, where previously till 31st December 2021, the purpose of such section was to collect statistics from the industry, whereas it has been amended being a constructive tool to collect information from the assessee. As we are all aware, presently the proceedings are initiated under section 70, where they are using the provisions of summon to submit certain documents, where for the purpose of summoning the documents, there should be an inquiry already existing, and only in relation to that inquiry, the powers were there to submit certain documents. Now, the law has been provided an additional section to the officers to call for information from the taxpayers. And section 152 gives immunity regarding disclosure of the information collected by the officer from the taxpayer. Whatever information collected by the officer under section 151 shall not be disclosed to any other board of revenue or any other officers without giving a proper chance of opportunity of being heard with the recipient, and without his knowledge, such information will not be shared across the revenue. The officer has to be confidential with the information whatever he has received under section 151, and he can share. It is not that he is barred from sharing. He can share only after giving opportunity of being heard to the recipient from whom that information was collected. And moving on to the major amendments in e-way bill provisions. So under section 129 till December 2021, the penalty for contravening or violating any provisions of e-way bill was given as 100% of the tax amount and 100% of the tax as a penalty. So section 129 collects both tax and penalty when there is a violation. So several representation and several cases were filed by the industry stating that section 129 is not a levy section. Hence the tax cannot be levied through 129 in the guise of penalty, because the taxpayer would have paid such taxes in his 3B, and collecting additional tax through 129 amounts to double taxation, and it affects the cascading effect, tax on the already taxed product. So hence the government has come up with the amendment that with 100% tax and 100% penalty, they have summed up the entire amount to penalty. Now the penalty has been increased to 200% of the tax amount when the transporter comes forward to pay the penalty. In case of exempted goods, it is 2% on value of the goods. When he is not ready to accept the penalty, then he has to either pay 50% of taxable value or 200% of tax, whatever he was payable under normal levy, as a penalty whichever is higher, for getting the goods released. Moreover, the option to file bank guarantee. So section 129 subsection 2 provided with a relaxation to the taxpayers to file a bank guarantee to get provisional release of the goods detained or seized by the revenue authorities. Now such relaxation has been omitted. The only available option to the assessee to get his goods released is to actually pay the penalty or pay any security to the extent equal to that penalty with the government in the form and the manner as may be prescribed. Form and manner are yet to be prescribed. There are no rules as on date. So it might be, when there is no rule, there can be a lot of chances of depriving such option of payment of security in lieu of such penalty and getting the goods released. So now it seems that the revenue has made provisions to collect the penalty as much early as possible without entering into litigation. Then the time limit to issue notice and orders under e-way bill provision has also been amended. So within 7 days from the detention, notice under section 129 for levy of penalty should be served with the taxpayer person concerned. The word used is person concerned. So by the term person concerned, they have included not only the person who is supplying the goods, but also the owner of that conveyance. Now even the owner of conveyance is being get hold with the contravention for e-way bill provisions. So within 7 days, they have to serve with notice. And once the notice has been served with the assessee, within 7 days, the order has to be passed by the authority. And after passing the authority, within 15 days, the assessee has the option either to pay the penalty and gets his goods released or to file an appeal. If he has not done any of these two, the goods would be disposed through e-auction, and they have prescribed certain procedures through new rule inserted under CGST rules. So under 144A. So the time limit to encash the penalty has been reduced by the revenue as much early as possible. So only the remedy available to the taxpayer to stay such disposal proceeding is to either pay the penalty or file an appeal with the higher authorities. Even if you file an appeal, in case of perishable and hazardous goods, the revenue authorities may still go for disposal and sale of that goods under e-auction. That is the revenue prone amendment what has been made through this Finance Act. And for the purpose of filing an appeal, if you want to file an appeal against the order of penalty under section 129, a pre-deposit of 25% of that penalty has to be made with. So as we all are aware, the pre-deposit under early prior to 1st January 2022 was only on the tax portion, whereas since under e-way bill tax cannot be levied, only penalty could be levied, they have converted the pre-deposit quantum from tax to penalty. So 25% of the penalty levied has to be paid as a pre-deposit for the purpose of filing an appeal, through which you can get the sale and disposal proceedings of your goods. And moving on, as I said, even the conveyance owner has been included within the recovery facet of the revenue. If the conveyance has to get released, either the entire penalty of the 200% of tax, whatever been levied under section 129(3) should have been paid by the supplier or the transporter, or only if the conveyance, apart from the goods, if the conveyance alone has to get released, then the transporter has to pay either 1 lakh or the actual penalty, whichever is lower. So the transporters should be well aware of the compliance of the suppliers who are using their vehicles for the purpose of transportation. So now the risk has been provided not only to the suppliers but also to the transporters who are transporting the goods from one place to another place. So there they have an exposure of minimum. The penalty on the tax, 200% of the tax payable on such goods, or 1 lakh, whichever is lower. Then Aadhaar authentication. Aadhaar authentication of the proprietor or the partner or the director of the entity has been made mandatory with effect from 1st January 2022 with respect to revocation of cancellation of registration, and also for the purpose of filing refund application. Irrespective of with payment of export or without payment of exports, the assessee should ensure that till 31st December 2021, let export order will be considered as a refund application when you are exporting goods with payment of tax. However, with effect from 1st January 2022, such let export order will not be considered as a refund application unless the author of the proprietor or karta or director of the entity has been authenticated in GST portal. So if it is not been done, it has to be the prior activity to avoid any hassles in availing the refund or in case of revocation of cancellation of registration. Moving on, there are other amendments apart from the implementation of provisions of Finance Act 2021. There are additional amendments which has been provided through additional notifications. One amendment which I forgot to mention earlier was till 31st December 2021, the blocking of GSTR1, blocking of filing GSTR1 was made when you have not filed GSTR3B for past 2 months. However, with effect from 1st January 2022, if you have not filed your GSTR3B of previous month, one cannot file GSTR1 of subsequent month. So monthly filing within the due date should be ensured by the assessees, because even the recipient will get impacted because of non-filing within due date, because such credits will not reflect the GSTR2B of recipient. So the government has amended the provisions on a 360-degree that they are pressurizing or they are not providing any space to the business, and they are mandating them to file and comply with the law within due dates on a monthly basis, which is a good practice. But we don't know how practically this will be implemented as a taxpayer friendly. And Rule 95(3) has been amended for providing relaxation to avail refund by the specialized agency who are notified to avail refund under Section 55. So one of the conditions to avail refund was in the invoice, the UAN number was mandatorily required to be mentioned, but in several cases the supplier has missed to mention such UAN number. Hence, the relaxation has been given that even if UAN is not mentioned, a self-attestation from the authorized representative will suffice for the purpose of claiming refund. So this is a relaxation move to provide refund to such specialized agencies. And there has been an amendment to Rule 154 with regard to e-way bill provisions. As we said, if you are not making payment of the penalty within 15 days from the order or filing an appeal to get that proceeding stayed, the revenue authorities may proceed with the goods and the conveyance to be sold or disposed via e-auction to appropriate the expected revenue taxes in the case of penalty. So if such goods and conveyance are being auctioned, then there has been a procedure prescribed how to appropriate the proceeds of such sale. So first, it has to be allocated to the administrative expenses incurred by the government for the purpose of conducting e-auction. And secondly, they will appropriate such amount against that penalty. And at last, if any balance available, it would be credited to the electronic cash ledger of the person if he is a registered person, or it would be transferred to the bank account of the unregistered person. If the unregistered person is unidentifiable or the transfer becomes impossible within 6 months from the sale of such goods, from the realization of proceeds of such goods, if within 6 months such amount is not being transferred to the bank account of that unregistered person, then the amount will be credited to Consumer Welfare Fund. The 6 months is not a restrictive or exhaustive period that could be extended by the proper officer if he requires fit. And with regard to attachment of property, the simultaneous amendment made in rules for safeguarding the rights of the assessee, they have also added the requirement to issue notice to the person concerned whose bank account is being attached prior to attaching the bank account. So till now, there was no information given to the assessee with regard to attachment of his bank account, and the assessee was surprised only information from the banking authorities, not from the revenue authorities. So now they have amended that the commissioner has to inform the assessee, inform DNC DRC 22 with regard to attachment, and the assessee has to reply to such notice under form DRC 22A with his grounds of defense, and if the officer seems that attachment is not required and he seems convinced based on your reply, he might not proceed with the provisional attachment. Otherwise, he would go for the provisional attachment, not only the taxable person, but also the properties of person who has retained the benefit through such maleficent activity. And there are other clarifications issued in the month of December with regard to claiming of refund from the electronic cash ledger. So several assessees were facing challenges where the government has deducted TDS and made payment in their cash ledger, which is lying for a long period without being utilized for the payment of liability. So there were difficulty faced in reality on getting such refund sanctioned, stating that cash ledger are not entitled to claim as refund. Now the government has clarified that the amount lying in your cash ledger are entitled to be availed as a refund, and there is no time limit. The time limit of 2 years will not apply for refund of balance lying in the cash ledger. The 2 years time limit will apply only to the input tax credit and tax amount, whatever the relevant date it links to, not for the refund of the balance lying in electronic cash ledger. And moreover,
Arjun, I think we may not be able to cover more. Just I think.
So with this slide, I will complete With this slide, I will complete the update, sir.
Yeah, quickly with that update, then we'll take the questions for this. Some questions already asked. I have noted down. There are 1 or 2 questions which you can see in the meantime. That also you can answer. Then we'll take a break.
Sure, sir.
Yeah.
And enabling the refund application for registered person in the Union Territory of Dadar and Haveli. So in recent time, Dadar and Haveli was merged with Daman and Diu, and the new registration was given in the Union Territory of Daman and Diu. So for the period prior to such merger, certain registered persons were entitled to claim refund, and the government has clarified that let them claim the refund application from the new registration under the option any other, even though whatever the reason it might be. The refund might be accrued due to export of goods and services, but still they have clarified that refund application can be filed under the heading any other option, and upload all the supporting documents to support the calculation of refund. And they have eased out the process of refund to the newly availed GST registration, and they have strictly said that no refund application shall be filed under old registration where it requires recredit to electronic credit ledger or debit required for the electronic credit ledger. There they have strictly said that no refund application could be submitted from the old registration. With this, I have completed the updates, and the final update is relating to the rate changes in textile industry, which has been deferred without any further time frame. The GST Council will have another round of discussion in their subsequent meeting, and they will decide regarding the rate changes with regard to textile products under textile industries. However, for footwears, the rate change has been implemented with effect from 1st January 2022. The rate has been hiked from 5% to 12% till the sale value does not exceed 1,000 rupees. So with this, I have completed our session on updates. Now it is open for the Q&A session.
I'll just take 2 minutes and cover the point. All of you must be wondering that how can the government keep on bringing in draconian measures without discharging its own duty of making everybody aware of things. Such draconian measures require 3-4 months of preparation, but they have simply brought in a law which is going to be applicable tomorrow. How many of the SSCs will be knowing about this change? At this point, you are coming to know about this change. How many SSCs will come to know about this change? Especially the small ones. Is it not terribly unfair? Is this the way we can allow this tax law to be administered in this country? Slowly, the tax officers are taking on the role of the judiciary. They are taking on the role of the parliament. Absolutely, there is the democracy in India is going as far as this particular department is concerned. They said that we will make the laws simple and fair. Are you finding anything fair in any of these things? Everywhere it is only revenue bias which is palpable, and they will take every case up to the Supreme Court. How do you fight? Whatever they say, are you going to agree to? I think there is a time that SSEs have to fight. This is like, the British rule where if something doesn't work, they would put draconian rules, and they used to subdue and make Indian slaves. As far as these people are concerned, they are making us tax slaves. They are making us slaves to the tax officers. So whenever overzealous officers are there, my suggestion is, please file a FIR, record what they say. Many times CCTV will be there to record it, put a case against them. And then I think this has to be agitated through the political system also. The Kerala finance minister is very strong. And I think some of you may have touch with him. I think you should take this up very, very seriously, because I feel that it is going to be difficult for you to, satisfy your client in case these type of things start. Because when will you get him relief? He'll say, I will come to you for relief. But the law doesn't allow you to provide relief. Everything you can't go to the High Court. I will take up some of the questions which were already there, and 4 questions I see now, which Arjun will take. Rani Pradeep had asked, say I have ongoing contract and 40% still is not over. As per the time of supply provisions, you will have to pay the tax on that, because 2 of the events are already happened. That is, service is over, you release, you are raising the bill, automatically your higher rate will apply. Next is Tony C. He says, single villa labor contract, will the exemption continue? I think it will continue.
Yes.
Then there is Tony again. Restaurant, will it have to give a GST bill to the e-commerce operator? The answer is no, because the e-commerce operator is going to pay it. Vijaya Mohan had asked, under 9(4), in that period between July and 13th October, whether that liability is there for the client. My answer to that is, this provision for removing it came as a omission. Very important, the word omitted was there. Omitted normally means that that provision never existed. And therefore, I don't think there'll be a valid demand. Practically also, I don't see much of the demands coming for those people.
And moreover, that in Amendment Act, sir, CGST Amendment Act, they have redrafted the entire section with retrospective effect. Correct.
So now the other things you can, there were some other questions there, if you can answer that.
Example for government authority and government entity, as I said, there will be an independent board or an entity, for example, for the purpose of discussion.
Housing board.
Housing board, yeah, or GCDA, Greater Cochin Development Authority. If it is a board and the control either through equity or through management, if the government has a control more than 90% of that board has been held by the government, then such board will be considered as a government authority or government entity. So the difference is there, they are not exclusively government, but they are controlled by government, having powers more than 90%, exercising powers more than 90% in that authority or entity. Then what, sir, what will be the status of GST notice issued prior to 1/1/2022 for the difference in input taken and GSTR 2A? Can we defend all such cases, quoting the new amendment, and no such provision prevailed before? Sir, to that extent, till October 2019, you can straight away challenge the provisions on the requirement of matching between 2A and credit, because there was no such requirement at all. With effect from October 2019 to 31st December 2021, yeah, you can challenge subject to the validity of Rule 36(4). And also, if you can prove the genuineness of all your transaction, apart from reflection in 2A, if you can prove that you have received the invoices, you have received the supply of goods and services, you have proper payment through banking channels, and you have all the documents through which you can prove that all other condition has been satisfied and the transaction is a genuine transaction and the supplier himself has paid the taxes, there is no involvement of fake invoicing or fake bills to avail fraudulent input tax credit. If you can substantiate all these factors, yes, you can still avail the input tax credit, and the chances of getting such credits are much more higher. Only thing is, there should be proper documentation or proper evidences to substantiate that you have fulfilled all other conditions, and you should have been fulfilled the other conditions prescribed under section 16(2). If you have fulfilled prior to 1/1/2022, you can still avail the credit even if it is not reflecting in GSTR 2A.
I think we have covered all the questions also. If there are any other questions, Aryan, we can take it. And should we take a break or we should complete it off?
Sir, up to you, sir. If you
we can complete it, but I think we will go directly to the practice management after any. If there are any more questions, all the chats we have cleared. All 10 questions.
Then we'll take it up in the last, sir. After the practice management, we can take it up.
Okay.
Later. Thank you.
Yeah. Arjun, take it to that practice management. These judgments are useful to all of you. Please keep, since chairman is going to share this PPT with you, you can use them. And if you have any clarification, you can write to Arjun. And if you're not happy with his clarification, you escalate it to me. So we'll start with the, since we have lost time, I thought that we can look at quickly covering this very important aspect of where we are. If I look at the opportunities in IDT, you have seen what type of law is there. You also have seen what type of officers are there. The areas where you can expect lot of issues, classification, including exemption. Even with this latest change, I don't expect less than 50,000 litigations to come in the changes which they have thought of, whether it is for government contracts or tomorrow when the textiles is bought, there is going to be a huge amount of dispute because of lack of knowledge, because of poor implementation. ITC is an area where it is becoming a very thorny issue, and the level of denial seems to be atrocious. Possibly courts will intervene. We have seen that courts keep intervening, but these people, what they do is that they change one provision, like that 16(2) provisions they have added. They change a provision and then you have to reinvent that entire litigation. It will again go through that, and it will take 4 years or 3 years for that matter to get clarity. In between, lot of disputes could be there. Valuation, luckily, is not an area the department is looking at till now, but be very, very sure all these areas are going to be seen in 2024. You are also seeing that, with this GST becoming more and more difficult, it is not becoming simple at all. Therefore, though filing of return, reconciliation should become automatic and compliance should be easy, thanks to the uncertainty of the law, the opportunity still is there. One more is that, many of us give opinions free, which are on the phone. I think both are not very great professional ways of going ahead. It is not that the client is going to, going to get any negative if you are going to give a considered opinion. If a client is not paying, you will give a casual opinion. And then it is possible that the client tomorrow, if he gets a demand, he will come back and say, you only told me this. Madhukar, you only told me this, you remember that day just 2 days after the New Year, I had called you, I asked you, you told me this. Now, what you told, what you did not tell, what he heard, what he understood could be all different. Therefore, I think opinion should be always by mail at least. Even if you give oral answers to your clients, please see that you give them a written follow-up mail at least, or a note. Letters from department are going to be numerous because they are now using the system to generate notices. For example, I think last month there were about 15,000 notices given in Telangana on one single point. 15,000 people got the same notice. Did the department apply their mind before sending? No. So therefore, replies to letters are also going to become opportunities. Please don't do free replies. No free replies. Find out what it is. Many times information on this is available on the net. We have also hosted many times draft letters itself on the LinkedIn and other places. One very important aspect is for those who are slightly bigger, 10 crores, 20 crores and above, those type of clients can do well to have a review audit. Review audit is basically a compliance audit, and also it will go into whether there is any benefit available under the law which has not been taken, any ITC not taken. Like this, there could be many. And normally when you do this, you can also, if your client is an exporter, you can look at FTP also. After seeing whatever you have seen till now, heard from Arjun and me, and also the past, the law of GST has been changing too frequently. More than 1,000 changes since the day it came. More than 1,000 interpretation of changes through the circulars are there, which also will create litigation. All this litigation is going to start not now. It is going to start after another year or two. It is like, the CBIC officers are like broiler farmers, poultry farming. They allow the chicken to get very fat, and then only they will do the attack. I don't know whether the anomaly is correct, but that is what they do. Maybe because of inefficiency, they allow it to grow, or they purposely allow it to grow. Because when the amounts are large, some of the errant officers can make money out of this also. While at this, possibly, as I said, you could also look at foreign trade policy. You don't have to read the whole policy, read a few articles so that you can give benefit to the client. And if you are doing something, then you can go to the appropriate procedures, etc. Customs is an area which you can look at because this customs is going to remain. And customs also is very, very important because as of today, the only advisors in customs are the CHAs, and now CHAs are being made redundant. So therefore, SSCs will require somebody who has some knowledge of this. But this is not something you can start immediately. You will have to study and go ahead. There are also certain opportunities in IDT, which is global services. You know that India has already started in a very big way in income tax. There are places, I don't know in Kerala if it is there, but there are places in almost all major cities where chartered accountants have taken on the KPO for income tax of different countries, whether it is of USA, whether it is of Australia, whether it's of Europe, and they are employing 200, 300 people within a period of a year or two. Huge opportunity in KPO is there. Now, KPO does not mean only direct tax. No? It could also mean indirect tax. And if you people who know GST in India, if you look at some of the other countries, what is the GST level at which they are certainly fair and simple. So you can master any law. A few people you can have who will master the law and take up compliance work for anything across the world. Next, please. Arjun? Yeah. There is also a systems and procedures audit requirement, just like your normal audit. GST systems and procedures audit is required. While a company may be very controlled with all the checks and balances for cash management, for inventory management, for its receivables, for its payables, as far as GST is concerned, there may not be a proper system. So there is a need for putting proper systems, and while doing these systems, knowledge of information systems will be very useful. This internal audit of GST, which is something like that review audit I talked of earlier, above 50 crores, it can certainly be a very good thing. Many of you who are listening here may be concentrating on GST. If you are concentrating on GST, one of the things you could do is that there are many chartered accountants who are known to us who may not know GST to the level you know. In such a case, you can give them plug-in services. They are doing internal audit or they are doing statutory audit, but give them plug-in services so that they get comfort that GST is covered, number one. Number two, their clients can get benefits which are missed in GST. In fact, we have done, maybe I have done about 10,000 audits in indirect taxes. And let me tell you, 9,500 I would have given value to the client, multiples of whatever fee is there. It's not because I am smart. It is because the law is unclear and the management may not be knowing the law to the extent we know. Therefore, there is a value available in all the internal audits also. Sometimes clients are only interested in ensuring credits are there. Now, with all these provisions which have come in, maybe we have to be very careful and see that proper reconciliations are done. ITC audit can be done. Department can say many things. Like one of the cases we have referred to in these earlier slides is Toyota Kirloskar, where in service tax they said canteen services not allowed, even if the same is mandated under law. Whereas in GST, the provision is very clear. If it's mandated under law, it's available. So the Toyota Kirloskar decision may be used by department to deny the credit, whereas you have to say that it is not liable, it is not applicable because GST law is different. Similarly, you can also do just a compliance audit. This compliance audit can be done for those who are ultra careful. The number of SSCs in this category may be very low. Due diligence is whenever there is any takeover, etc. GST has become a very important aspect of due diligence. And therefore, if something is missed out there, the receiver, the person who continues, is supposed to take over all the liabilities, and therefore, what I would say, suppressed liabilities of the past can become a big risk in the takeover. Sometimes the companies have a lot of dealing with their own group entities. Valuation audit could be very important. Classification exemption audit, I think, has to be done by every entity every year till the rates settle down, because there are so many changes. Client is not aware at all. He keeps doing whatever he's doing. He may end up with either paying more tax and losing business, or paying less tax and paying with penalties and interest. Specific review audits also could be there, where there is some profit, anti-profiteering possibility, where there's a lot of job work being done. Job work can lead to a lot of liabilities also, or where there is a huge amount of RCM, whether it is for payments for import of services or local. FTP review, that is foreign trade practices review and compliance review, also is something which indirect tax experts can provide. Here you may require some little training before you do it. Next, please. Today, the biggest area of GST, next 10-15 years, I can expect that there is going to be huge litigation. Now, there is no choice for people because they have to reply in time. If they have not replied, then they have to fight the order. At the time of order, whether it will be accepted, not accepted, we don't know. If I look at litigation practice in GST, you have understood that the law has had so many changes, 1,000 changes circulars, 1,000+ circulars, then the interpretation of the people at that point. So there is no question of the scope, huge scope. What is the amount involved? That will be a problem. So sometimes you might like to get a retainer for a short time and then go into a case-to-case basis. I don't know how, what you'll do. But litigation practice is certain to happen. It is going to explode. So how do you take care of litigation practice? First, you have to possibly understand which are all the areas of litigation. There is a course which we did with Tax Sutra a few months back, and it is available in a downloadable, what you say, recorded version. You can possibly look at it and learn, because I think it has around more than 50 hours of various types of topics in litigation we have looked at. And litigation is going to be anywhere. No? Your client is sitting in Trichur, whereas the truck gets caught in Delhi. So how do you take care of them? How do you ensure that that particular truck is, there is a proper answer given? If it can be released by giving explanation, well and good. Otherwise, you are going to end up paying 200% penalty everywhere. And where are you going to go for refund? It's going to be very difficult. So whenever we are doing documentation, probably we have to ensure documentation is pakka. One more area is these constitutional challenges. Constitutional challenges will continue, like we discussed about that clubs and association. And many times when we were talking about ITC, we were talking about, whether whatever has been set out by the department, is it arbitrary? So does it go against Article 14, equality? Does it go against the liberty to do business under Article 19 or 21? One area where I think very important for all of us is we need to understand legal maxims so that we can examine wherever there is a problem in the provision, the amendment, or the circulars. Sometimes litigation is also possible in the definitions. If we understand all the definitions, huge amount of possibilities there. Composite supply, mixed supply is one of the examples. Levy, of course, we have seen that there is so much of possibility of litigation today in levy, whether it's a supply or not at all a supply. Reverse charge, we have discussed a few. 9.4 we discussed, 9.5 we discussed, and also the schedules. You find all the schedules also have started looking at revenue bias. Many of the amendments look at whatever leeway is there is being removed. Place of supply, litigations have not started. Again, I'm telling you, 2024, this is a place where you can expect tens of thousands of demands. Time of supply, almost all contractors are not following. In the real estate, they are not following. In other cases, I think most people are following. Classification exemption, we have already talked about, especially when we talked about that government. Valuation, we have talked about. Maximum in input tax credit, litigation will be there. Because the eligibility is being questioned, the procedure is being questioned. So therefore, a lot of litigation will be there in that. Next, please. So what should we be? We, the chartered accountants, we have to be versatile. What is versatile? Versatile is anything new we should be able to adapt. What is going to happen after 1/1/22? Whatever we knew is there before 1/1/22 in regard to all the changes is something we have to unlearn. And we have to relearn what is going to be there after 1/1/22. And we have to be agile. We have to be updated. I think one of the things which is very important now in GST for us all to do well. Remember, when I came on this seminar, the first thing which Prashant mentioned was that I was instrumental in more than 1.5 lakh chartered accountants starting GST practice in 2017-18. Let me tell you, whatever amount of learning you had that time, now you require to update yourself, because there are so many decisions, so many changes in law. You have to be future ready. You have to start early. Maybe one of the things you have to see is, can you use technology to reduce your cost? Because clients are not willing to pay large amounts. Clear tax, clear tax, what it did to income tax. And clear tax is there in GST also. So you will have technology coming in between you and the client. So you also should embrace innovation. There are a lot of softwares which are reasonable. GST Easy is there. Then you have some other software. Maybe you can check with Arjun if you are looking at it, which are quite reasonable. Per client, something has to be paid. What is certainly needed is we have to equip ourselves with knowledge and skills. Skills is not what we already had. What skills we need to have. Now, this online arguments. It has also brought in some big advantages. It has also brought in some great disadvantages. Large stake cases. Can I do it online? Maybe not. Complicated cases. Can I do it online? Maybe not. Otherwise, you're sure that the case will be against you. In such cases, we might have to look at how we have to manage this new way of going forward. Changes are happening too rapidly, as I see. Next. Some of the supporting characteristics which I would say for all of us to acquire, and even in my LinkedIn posts, even in our office, we try to see that all this is taken care of. But what I would say is, knowledge is the key. Others most of which we may be having to a great extent, but knowledge is something you have to acquire. Even the cases which are there in service tax, for example, the Toyota case which I mentioned. If now that service tax was like that, and therefore that case is only relevant to service tax and not to GST. Maybe we have to get some in-depth knowledge, for which we may have to be part of some discussion groups, which you can have in Kerala. We also have one discussion group, which if any of you are keen, you can ask Arjun, and he will put you onto those study groups and discussion groups. Maybe we have to also look at certain verticals, maybe hotel vertical, or today hotels, of course, in this pandemic are in very bad shape, but maybe any other vertical, restaurants vertical, if there are any SEZs, STPIs. What about IT, ITES? We have talked about e-commerce. There are a lot of e-commerce new startups coming. Can we help them? And of course, other taxes which we talked about. We also have to have a high level of integrity, because the client should be sure that this is a chartered accountant and therefore he will deliver quality to me. But if I don't know, I should tell him right in the beginning, I am not an expert on GST, and then only provide the service. Please see that these things are on record. Otherwise, the credibility of yours and the profession is at stake. We also have to ensure that confidentiality is there of ours as well as our staff and the processes. IT has become so open now that, on a small pen drive, the entire client's information which he has shared with you can become a public information which can cause havoc to the client as well as you. Maybe we also should be very clear, do what I know only. You have to have professional competence to do. It's not that it's very difficult. There are so many courses available. Last slide, we have put some of the courses which you can look at, how you can maybe rely on that. Training myself and the people in office is very important, because we have to be versatile and also, as I said, tech savvy. Interpersonal skills has become very important, because we can't, unless we have people with us in our office who are there for a longer period of time, we cannot manage. If you look at bigger clients, there is no tolerance for corruption. Corruption is receding also. However, the department and the way the law is being administered, there is a possible of a short-term spike. We also have to be willing to invest time and money for future. Those days are gone when, we only used to depend on the client. Those days are gone when we used to only depend on doing things with clients' money. Subscriptions, online tools, all these are going to be essential, I think, going further. Many of us think that this person has common sense, I don't have, but you can build common sense. If you go to Google, you will find all this. Analytical thinking also can be built. How do you look at a case law from alternatives? How do you look at a particular change which has come in alternative ways? Everything is possible if you have analytical thinking. Our language is going to become very important. Remember, there's no time for everybody. We can't write 50 page replies and 100-page appeals. Maybe we are looking at 5-10 pages of reply, maybe 15 pages of appeals. So it's going to be precise writing is going to become important. Drafting is going to become important. We also, as a person, as you know, that I have built a very big organization, and it has primarily been built due to delegation and building a second and third level of people. Like Arjun today, his knowledge of GST, current GST, is possibly much higher than mine. My experience in indirect tax may be more, but his knowledge of GST is far higher. So we have built 60-70 people like this. This you also have to do. You can't say everything I am going to do. When you are busy, there are people under you who are not that busy. Ensure that they become experts, at least at the processes, at the procedures. There could be many more. Next, please. So how do I do it? First, get a good depth of knowledge, get skills. And now online training is available. I don't know, this Omnicom also is going to give us some more opportunity. Maybe we'll be sitting at home. We can do all these things. Share and create perception. Remember, the world doesn't know who you are. And sometimes we don't know where to share. For example, I'll share something which is a learning which I got maybe a couple of months back. I used to think that I have written so many books. I am the top in all the answering groups. Contribution as articles. My office, at least 40 people contribute articles. 20 people train in seminars. So we are known everywhere. I was surprised to know that all this is only restricted to chartered accountants. So therefore, the decision makers in companies who are MBAs don't know me at all. So now if I have to look at it, if I have to create perception, I can't do it on my Facebook. I have to go to maybe LinkedIn. Many of you would also find this advice. LinkedIn has become a very powerful tool to be present, to learn, and also to be visible. You also know that we can work very hard and not get results. So the point is that if we are able to make a ABC of what we need to do, the A part of it which is 20%, 80% of the impact can be with 20% of the work. And of course, we should not have decided anything in this all the time changing GST law. We should have an open mind. If somebody disagrees with us, try and find out why it is so and go forward. These you can go through. These are basic and advanced courses which are a little old. There are some newer courses also available on the N.Hiregange Academy website. Possibly you can go and get it. In case you have any difficulty in getting any of the online resources, you can contact Arjun. One of the points which many of us, join online for many courses, but what happens is we don't take it properly. We don't have an act with us on the side. We don't have notebook to note down our learnings, which after some time we forget. One of the other things which is very important is after every online, this is not an online class what we have done today, but if you are taking an online class, please take 15 minutes after the class to summarize everything. And maybe revise it if you have a chance. And if recorded videos are there, like this particular session, I think Aryan was telling me that it will be through a recorded video, and obviously it will be there on the website of the 9 branches of Kerala. Maybe you can always go back and listen to it. Post lockdown, again, we are looking at one more lockdown maybe. And if it is not there, we are very happy. Remember, there is always a pent-up demand. There will be a lot of business coming in future. So we should be clear that our basics are clear and we can learn the advanced things. Next, please. Deeper understanding, I'm not going to give this. Basically, once you have got basic understanding, how to get deeper understanding, I've made the small notes on that. You can go to the next one. Expertise is the next level. After you have got a deeper understanding, at a deeper understanding level, you can give 80% of your services. Maybe expert advice, expert opinion, high level litigation are what you can get from expertise. And it takes a little time and experience. Piggybacking on somebody who is already there, or having a connect to an umbrella organization so that you are able to validate what you do through some experts, could be ways in which you can get expertise. Next, please. I would like to end this session and open it for question answer by looking at some dedications. I've also put it in LinkedIn. I think that many of the things we do are not so difficult. If you look at our office, look at how Arjun got his expertise. One is clear about where he wants to go, when he wants to reach, and focusing on those things. I'm very sorry, little of cough is there. I think 1 hour of reading is very important, and sharing is very important. Go further. Gratitude is something which is very important in life. Even when we, when many of us look, we sometimes work below the line, as we say, blaming, what we say, bed, blaming, excuses, denial. All are disempowering. Whereas taking responsibility, being accountable, looking at alternatives are the empowered way of working. That is something you can do. We also should take care of our physical and mental health. These days, things have become so much controlled by the Netflix, the mobile, Google or the Amazon. Even every serial we see comes with the advertisement which are disturbing our mind. Most of the things which are being advised are unhealthy also. Anyway, that is something which you will have to look at. But when we start 2022, we can commit to working honestly, sincerely, independently, and not let us be leaders and not be victims. Next, please. So these are the commitments which I have made. These are not, I'm not asking you to make the same commitments. You can look at what works for you in this, add your, what you want to do, at least have a five level dedication for 2022. And both Arjun and me wish you future leaders the best in 2022. We'll take questions and then we can close.
Okay, sir. Thank you. Thank you, sir. Dear participants, please raise your hand or use the Q&A option for asking the questions to our speakers.
It was too long, I think, Aryan.
Yes. It took almost 3 hours. And
it's too much, no? It becomes
yes,
barren.
yes.
Very difficult online.
Right. That's too much. Arjun, Spudarjunan sir was using too much time. He was explaining all the details. Very, very interesting that. And just like what sir you are telling that it is becoming very tough now to handle GST. due to this, even though they are even taking out the constitutional rights, which he was mentioning that
Yes.
some reasonable restriction. I don't know whether they are aware of what is reasonable restriction and restrictions. They are putting more restrictions than reasonable restrictions, which equality or any other fundamental rights is actually deviating from all the fundamental rights.
Correct. Actually, Kerala is a good place to start because your finance minister is very strong.
Yes. Actually, there our finance, many representations has gone from our state, but ultimately it is a collective decision of the entire GST.
I know. But see, unless you make noise, you can't make change.
True, sir. It seems there is no other questions.
Yeah.
Yes, requested also. So we will move to next.
Yes. Please.
So I'll just have one, sir. It was an excellent presentation. There is no. We started with these associations and their tax GST liability. Now a lot of changes has been brought by new GST Council, and slowly they are tightening the provisions and this return filing procedures. They are and giving a lot of pressure to the business people to do or comply the provisions on time, filing all the returns on time. Otherwise, you will be denied the credit. And now they are also giving some statutory right to hold the payment. I don't know how they are taking out the rights of people, business, how to do the business, and it is very tough. Just like new e-way bill provisions and other changes what coming from this January, and other points which Madhukar sir and Spudarjunan sir was telling, that we have to approach the cases in a different way, so that just in audit and other things, we have to do a lot of documentation. Now even for approaching the officers, we have to do a lot of documentation, something to protect our clients, because many communications, the bureaucrats, they are taking away the rights of people. And sometimes these revenue authorities, they are just giving demand notices so that at least some percentage of demands they will get and they can meet their target. So it's a really tough time for the assessees. So we have to be very careful handling the GST and other things. Thank you, sir. Thank you, Madhukar sir, and thank you, Spudarjunan sir, for giving this wonderful session. Now, I request for vote of thanks. Sir, our Vice Chairman of Kottayam Kannur branch, Shiva Prasad sir is there. Sir, I request you to propose vote of thanks. Over to you, sir.
Presiding officer, chairman of today's seminar, CA N.Hiregange, very distinguished learned speakers, renowned chartered accountants, CA Madhukar and N.Hiregange, and CA Spudarjunan S, very vibrant chairman of all branches of Kerala, dedicated members of the managing committee, my dear members in the profession. We, being the practicing chartered accountants, always update our knowledge in our subjects. Today, we had a very important seminar on GST, and all the 9 branches of Kerala joined together. It is no doubt that we have got the right persons for presenting the paper and to elaborate on recent changes in GST law and GST practice management. We are fortunate of having brilliant chartered accountant CA Madhukar and N.Hiregange, along with CA Arjun Sitaraman, who have proven their in-depth knowledge and have an authority on the topic. It is our happiness to meet them, to attend their session, to interact with them, and ultimately to enrich our knowledge. It is my privilege and pleasure to extend our sincere gratitude to the esteemed members of the faculty, CA Madhukar Hiregange and CA Arjun Sitaraman, for spending their valuable time, for sharing their knowledge, and for their excellent presentation and the address. Thank you very much, sirs. Looking ahead, your continued support and association with us. We are grateful to the chairman of Thrissur branch, CA Aryan, for taking the lead role in the seminar, and all the chairman of the branches for their commitment, and of course, the members of the managing committee of all the branches. For success of any program or seminar, participation is most important. We value the participation and are very much grateful to all the members for your support, motivation, and for their gracious presence. Friends, take care, be healthy, be safe, and be happy. Thank you.
Thank you, sir. Thank you for that. And now we will be standing for the national anthem before concluding the meeting.
गणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you, sir. Thank you, Madhukar sir, and thank you, Spudarjunan sir. Thank you, Shiva sir.
Thank you, sir. And I thank Thrissur branch and all the branches of Kerala Institute of Chartered Accountants of India for providing this, this wonderful opportunity to share our knowledge. And I humbly dedicate my gratitude to all the managing committee of all the branches for providing us with this such a wonderful opportunity to deliberate the insights on the recent amendments and also the GST practice management by Madhukar sir. Thank you, Aryan sir, and thank you, Shiva sir, and thank you all the management committee members.
Thank you, sir. Thank you. Excellent.